Today is Monday, January the 13th, and I'm out of town on personal business and don't have access to my computer. So I'm doing this on an iPad, and I'm going to share with you Thinkorswim's platform for the charts instead of MotiveWave. But first, let's look at FinViz, and we can see advancers and decliners. Advancers led decliners by 2 to 1, and there was a big pop at the end, but the market basically was going up all day. Volume, as you can see, was consistent with what we've seen last week, which was average relative volume, which is a good thing. You know, the market's moving up and the volume is there to support it. Pretty much everything was green except healthcare and Wells Fargo. And Wells Fargo and JP Morgan and Citibank all have earnings this week, so we're kicking off earnings for the fourth quarter, which are expected to be challenging, but they said that about third quarter earnings, and that didn't materialize. So let's just see. Certainly there's no concern in the market today about earnings. In fact, they seem to have been celebrating the fact that China was taken off of the currency manipulation list. So I guess they're no longer currency manipulation, a country who manipulates their currency anymore. Clearly that was just a bargaining chip, and they probably shouldn't have been there in the first place. But let's take a look now at the daily breadth oscillator. So we ended up Friday with it just a bit below zero. Today we're going to pop up above zero. All we're doing is churning on either side of the zero line, and we've been doing that for over a week now. So now we're going to go to Thinkorswim, and there's my family. And let's authenticate that. So now we're looking at the SPX. And we did close on a record today because Friday was a down day and we ended up higher than Thursday. So if we look, well, we looked at the chart before and we saw that pop at the end of the day. So you can see this is today's volume. I don't have a pointer, but you can see we're up all the way throughout the day. So let's now go to look at Apple. And Apple had that kind of a day as well. It was just an outstanding day for Apple. And congratulations to anyone who's long Apple Delta. I got to look and see what my Delta is for Apple. You know, you have a 100 Delta for every 100 shares. So I now got 2, 4, 6. I've got 6 options contracts, which are doing well, but they're all February, March option contracts, so they're moving slowly. And at $317 now, they are all in the money, meaning that it's just time decay that's going to contribute to, and you know, a little bit price, but mainly time decay is going to contribute to making my goal there. So probably when they're at 50% of their profit, I'm going to take the profit and just buy more future Apple, because I just think it's going up. Look at the volume in Apple as well. That's the second chart there. And you can see that the volume was just below the 20-day moving average. But if you look at the stochastics, and these are the fast and the full stochastics that Thinkorswim uses, so they're not the same parameters as we use in MotiveWave, but they clearly are both in the overbought area, and that shouldn't be a surprise to anybody. I mean, Apple has doubled its value this year. It's up 96% this year. If we look at Caterpillar, let's look at Amazon, because we've got some contracts in Amazon. Here you got some Fibonacci's, and the Fibonacci's cover this low to this high, and then we had a pullback all the way back down to the low. You can see right, I haven't got a pointer, but you can see right in the middle of the screen there where we came back down and we touched the zero line. That establishes for us that we have a good Fibonacci. And if you look at the 38.2 and scan your eye across the 38.2, and you can see that on the way down as well as on the way up, the 38.2% played either support or resistance. And now we've got this 61.8% resistance. Look at the volume. The volume has been tailing off for the last week, but we had 3 days, 4 or 5 days in the last 2 weeks where we had significant volume over the 20-day moving average. That's institutional buyers that are stepping in to move the stock. But again, if we look at the stochastics, we see the fast stochastic is taking a little bit of a turn upwards, but it's generally in a down direction, as is the slower moving stochastic. But nonetheless, this stock is going to be moving based on what people feel their earnings are going to be towards the end of the month. So I'm still long Amazon, and once we break 1900, I'm going to be adding to my vertical call position there. So if we look at Caterpillar, only up 69 cents, still just churning along, and we don't see the channel that we were showing in Motive Wave, but clearly we're still within that channel. But look at the volume. The volume was significant. This is the first time that we've seen volume all week above the moving average, and we have to look at 2 weeks ago to see 2 days of it. And look at our stochastics. Our fast stochastic now has hit the bottom, and it's moving back up. This is good for the stock. The full stochastic, which I take to be the slower moving stochastic, because it's obviously moving the slower rhythm than the faster one, has now hit the bottom, and it is moving up. So it's going to move up. So this is all signaling good stuff for Caterpillar. Caterpillar is a good stock. I still am short the 135 calls. I mean, that's not a good place to be. But I'm not sure Caterpillar is going to have the best earnings this quarter. So I would like to just keep making 50, 60 cents per share a month. It's like having a dividend. And they're going ex-dividend on the 17th, which is Friday. So before Thursday, I have calls that expire on Friday. So I'm going to be rolling those anyways, because I'm going to roll them far enough out so that my stock doesn't get taken away and that I get to enjoy that $1.02 dividend, which will be payable sometime in February. The other stock that we're holding on to is Whirlpool, and that had a great day today, up at $1.81, $3.10. And again, the Fibonacci's here, and if you look, we have just tapped out at 153.44, which was our high today, and that is the 61.8% Fibonacci. Now, how good is that Fibonacci from the low point drawn here to the high point? On the way down, we stuttered a little bit at 78.6, came up to 88.6. We dropped down below 61.8, and we don't have a 50% drawn in there, but it's probably around 50%, and then we've been playing a couple of weeks at 61.8%, and now we're starting to move up. That's signaling some good stuff, that the Fibonacci's are good. Whirlpool should be going up to its next Fibonacci area, 158.3, and eventually to 163.85. Look at the volume, though. The volume was really significant. So now we've had 3 days out of the past 5 where you have institutional buying involved. But the stochastics are showing that it's overbought. Just be aware of that. Its earnings are coming up. I'm not sure when, but take a look at that. I'm still positive. As long as the economy is good and home builder numbers are good, then Whirlpool is going to do good. Remember, they've signed this exclusive contract with D.R. Horton for their future homes. So that's it for today. I'm going to be doing the same thing tomorrow because I'll still be out of town, but should be back Wednesday night, all going well. Thank you.